Hey everyone, this is Tim Dial, and I just wanted to put together a short video here and upload it because today is Fed Day, and the Fed has made their announcements as far as what they're going to do concerning interest rates and other factors that go into interest rate movement in the 30-year mortgage market. So I wanted to go over that, and I'm going to go over the chart a little bit to show you kind of what activity has happened since and how it is moving the market. I'm going to go ahead and share a screen with you real quickly here so we can kind of get into this. And let's see here. It is the screen. Okay, so here's the screen. This is Jerome Powell. This was him speaking today. And I'm going to include real quickly just a very short period of time when he started speaking at the very beginning and the things he said, because those are kind of the key things. He went into a lot more detail later. But the stuff he said at the very beginning is kind of a summary of what they ended on and what is impacting the market. So I'm going to play that real quick here.
Squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments.
Okay, so anyway, that was the short summary of what they've made their decision on today, which is basically that they are keeping interest rates the same. They didn't make another cut. That's kind of what we were expecting to begin with. They also made the decision, or they haven't really made the decision, but they are sticking with that they expect there to be 2 cuts this year. I still believe that they'll make more than 2 cuts this year. I believe they'll have to change that because of some of the economic stuff that's going on. But they're announcing that their expectation hasn't really changed on that. Now, normally, when they make this kind of announcement, because it wasn't necessarily positive, they didn't make anything positive there as far as that part of the announcement. Normally, those things would have caused rates to rise, would have caused the 30-year mortgage bond to come lower. That's not what's happened. That's not what's happened, and it's because of what he said, the second part of that statement, which is that they're basically slowing what is considered as the mortgage runoff, the investments that they have in the treasuries. They're slowing that runoff. They were allowing about 25 billion to run off every month. Now they're slowing that to about 5 billion. And that will cause interest rates to drop because that's a very positive development. So what they're trying to do is they're trying to keep inflation down as much as possible by not lowering the rates anymore. Because these tariffs are inflationary that are going on right now. So they're trying to keep inflation down, but at the same time, they want interest rates to come down because the economy has slowed. And so that's why they've slowed the runoff. And so I'm going to go ahead and get into the chart a little bit here. As you can see, currently the 30-year mortgage bond is up 14 basis points. So that's a positive move here. We started the day down. We were down here. If you can see where this is, we're down here today, and it's moved way up since then. So that's a positive. This upward trend is continuing today on a whole because of that mortgage runoff announcement that he made. That just means that people will invest more in mortgage bonds because that runoff has slowed. So, and that's going to cause these prices to go higher. And like I had said before, we want this to keep going. We want this trend, we want to be like this one back here, which was like about 2 weeks ago or so that we had this run. We want that run to continue up into this range, and this will be like a perfect refinance opportunity for a lot of people once we get into this range. So we're looking for that trend to continue over the next week or so. And I think we can get there because of this announcement and because of that slowing of the mortgage runoff. It's going to make a huge impact, I think, in the market. It would have been better if he'd announced that they plan on making 3 or 4 cuts this year. Then it would have moved even more. But but at least there was something positive that did come out of the meeting. And then right now it's just going to come down to what happens in the economy. They're estimating currently that the economy will slow, but it will still grow. It's just going to grow by a much slower amount than expected because of tariffs and things like that. That's what they're saying. But when you look at the Atlanta Fed is expecting a negative for the first quarter. And so we're just going to have to see where the numbers actually turn out. If we end up with an actual negative the first quarter, that's going to be different than what the Fed's expecting, even though the Atlanta Fed is expecting a negative number. So, we'll have to see where that lands. If they do land on a negative, and if they're projecting the second quarter to also be negative, then the Fed will have to do something a little bit more drastic, and we'll see an even bigger move. So, and that's not too far away. We'll get something probably from the Atlanta Fed, probably toward the end of the month or maybe the beginning of April, as far as where they think this number is going to end up being. There is something going on right now with gold, which evidently the Atlanta Fed doesn't factor in the gold investments. And there are some economists who believe that the gold numbers are going to help the economic GDP number to where it may not be negative, it might be positive, but only slightly. Like we're looking at 0.1 or 0.2% positive instead of a negative 1.5 to 2. So anyway, that's kind of what I wanted to cover real quickly here. Lots of stuff going on here in the data, but refinancing is definitely heating up because we are getting close to that golden spot where we want to be to start doing a lot of these refinances. Anyway, if you have any questions or anything, just let me know. I'm here and available, and I look forward to talking to you soon. Thanks.